All right, so here's a weekly update on my stock market portfolio with Questrade. So my total equity is right now sitting at 109.81. During the week, I think it reached 97,000. So right now I'm at 109.81. And if we go look at my positions, so in my margin account, I'm sitting on 2720 cash US. So remember, last week I think was around 4,000, but I had to close a lot of trades this week, so that's why the cash dropped. My positions though in my margin, so I only sell options in my margin account. So I've got this earnings trade on check that ended up being an iron condor, so I'm waiting till November 20th. Basically, I need it to stay above 75 and below 85 for this to expire worthless. I've got an electronic arts naked put that I'm going to roll to next week, November 13. And basically, I just need EA to stay above 120 to win on this trade. I've got an earnings trade on 3M expiring November 20th. Basically, I just needed to stay above 155 to win on this trade. I think I collected about 90 cents on this trade. 245 minus 153, so 92 cents it looks. I've got Rocket, a naked put that I just keep rolling. It expires November 20th. I've got a 22 strike. It has earnings though next week, so hopefully it moves up and not down. I think Rocket is trading at around 21 right now. It's trading at 21.31, yeah, so it's close to my short strike. Actually, I can actually close it right now for a small profit, but I'd rather hold on to it and go through earnings and try to collect more maximum profit out of it, because even if it drops, I'm just going to keep rolling. I'm not concerned about this dropping, because I'll just roll the naked put forward for a credit. It'll be a smaller credit, of course, if Rocket's at $18, but hopefully it goes up and I can actually collect max profit from this trade. I've got a SPY iron condor. Initially it was a put spread at 340, 335 that I had to roll, that I didn't have to roll, but I ended up rolling it. And now when SPY dropped to almost 323, I sold a call spread at 355, 360, thinking that it would be very safe. And right now SPY is at 350. So now my 355 call spread is going to be problematic. So I actually would like to get out of this trade. I'm just not sure how. If I get out of this trade right now, I think I would lose about $1. So times 100, so that's $100. So I'm not sure how I'm going to manage it. Either I'm going to roll up the put spread up to the same strike as my 355 and hope that SPY closes near 355 come November 20th. Or I could just get out of the trade right now for a small loss. Or I could close the call spread for a loss and just let the put spread reach max profit. Or maybe just let it play out and hope that SPY stays below 355 and above 340 come November 20th. I'm not sure yet. We'll see how the week goes next week. And this was a trade that I opened on Friday, November 6th for November 13 expiry. TWLO was the only thing on my list that dropped that day. Everything was up or slightly down. This one dropped 6%, I believe. So I sold a put spread at a 275, 270 strike for next week. And I collected $1 from this one. I'm going to try to let it go to expiry. I won't close it early. I want to try my hardest to just let trades go to expiry and not miss out on easy profits. So nothing changed in my TFSA. I still have the same dividend stocks. I didn't buy anything. So if you watch my update last week, it's pretty much the same stocks because I didn't do anything. Things have gone up a bit, so it's sitting in a better position. This one seems to be my biggest loser right now, MMP. But TD came back up a little bit. I'm ready to buy some more TD if it drops more than 10% of my first purchase price. And collecting dividends from it. It's getting deposited in my trading account. So really nothing special in my TFSA, just a bunch of dividend stocks. I put in $1,000 each in each stock and ready to put in another chunk of 1,000 if anything interesting comes up. So I've got TD, I've got AT&T, I've got RioCan, Pizza, Realty Income, MMP, Manulife, IBM. Gold is not a dividend stock, but I just wanted to invest in gold, so I put in $1,000. Choice Properties, China Mobile, Bank of Nova Scotia, and Bell. In my RSP, I've got 3 covered call trades. So I've got IWM at a 152 strike. Keep collecting credits every week. My next expiry is November 13th, so this week. And as you can see, IWM is at 163. So come Friday, I might roll again at a 152 strike, or I could just take my shares back at 152 and then get the capital back and use it towards something else. I've been collecting credits on IWM by selling covered calls since February, so I'm not disappointed in getting my capital back at 152 because I've been collecting a lot of credit on the way. On average, maybe $80-$90 per week since February. I've got a covered call on Virgin Galactic, bought at 23.62. Stock is trading at 19, and right now my covered call goes to 23. Goes to December 18 at a 23 strike. And when I get closer to December 18, I'll just keep rolling for some more credit. Obviously, I'm not collecting good credit because the current market price is super far from my purchase price and far from my strike that I'm selling at. But that's the risk with covered calls, is if the stock drops, you're still long 100 shares. That's the risk with covered calls, is that you're long 100 shares, and obviously the strike that you sell at caps your selling price, caps your upside. So the call that you're selling, you have to be comfortable letting your shares go at that price. And since I bought it at 23.6, I'm okay selling it at 23. My return is basically the premiums that I'm collecting from selling the covered calls, although it's not much right now. So work, same thing, bought it at 28.6. Right now it's at 27. I've got a covered call for November 20th, so in 2 weeks, so 2 weeks away, at a 28 strike, and I just keep collecting premiums from it. My RESP is a mess. It's Intel that I bought an average price of 56. Right now Intel's at 45, and I ended up selling a covered call at a 55 strike all the way out to February 19. So this one's pretty weak, pretty useless. I just can't wait to Intel to come back to 56, and I think I'm not gonna mess around with Intel anymore, although it's a very good stock, but it's not doing well stock price wise. So I'm just gonna get out of it when I get the chance, and I might just invest in dividends like I'm doing in my TFSA, since this is a long-term investment. And in my RSP, if I get my capital back from IWM, I might do some covered calls on either Apple or even Walmart. I find that Walmart is pretty safe in terms of during crashes and recession. It drops a little bit, but not as much as Apple or any other stock or even the general market. So I might do Walmart, although it was trading at 138 at some point. Now it's at 145. So I might do covered calls on Walmart. Obviously, the premiums on Walmart aren't as high as Apple, of course, but at least the stock price itself is more stable than Apple. So might consider one of these, either Apple or Walmart, in my RSP if I get my capital back on IWM this week. All right, so if you have any questions, leave them in the comment section below. Any suggestions as well. Like always, if you're gonna open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free trades. Also check out the other referral links below. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.